Hey traders, welcome to Charts and Coffee. Great to see everybody. Happy Thursday. Hope everyone's doing well. All right, so we have another update in the market. And by the way, in tonight's free video, which will be posted on the Simpler Trading YouTube channel, I'll dive into a follow-up from my last Friday video where I walk through what levels have to be broken, why I think still the directional bias for the S&P is down. At the same time, which sectors within the S&P we want to short, not necessarily the S&P itself, and which sectors we want to be long. So I will definitely follow up on that because, look, it's bounced a bit, but is that breakdown, is that analysis still valid in what's happened since then? Well, one of the things that's happened since then is the buy that we had on XLV. So this is one of the setups that I talked about in that video. And I know quite a few of you probably caught that video. I think we have something along the lines of 4,000 views for that. So if you haven't checked it out, go check it out. And that will be a great precursor to tonight's video. So one of the setups we talked about in that video, one of the setups that we took in the Sector Secrets Mastery, whammo, this this XLV. All right, so we're just going to jump right into the questions here. And so kicking it off with, hey there, Anders. All right, and by the way, I got a couple resources there on the left side, questions that I get asked quite a bit. So you'll see those on the left side in the notes. All right, so first up, good morning. Could we have an eBay short? All right, so let's go take a look at the structure. Let's see what we are working with on eBay. Okay, so looking at this year, I don't want that much data. Looking at this year, what kind of structure we're dealing with in eBay, the overall trend clearly has been down. I mean, you could see that really through the red grab candles and the lower row of our multi-trend. So now what? By the way, we're below the 200 as well. So would this be a short? Well, if you take a look, and let me grab my drawing tools here. If you take a look at what we're actually dealing with, which is this neutral, see that right there? Now that's a significant difference from when we had this red, right, downtrend on the multi-trend. So now you can see that our slow stochastic is actually telling us we've got a good shot at moving higher potentially in this chop, but that the chop will likely remain below these highs in here, right? Even if we get up to the upper end of the range, what we're really interested in, can we even get to and through the 50%, the halfway mark of that slow stochastic? So keep an eye on that. Yes, I think it's shortable, but treat it as a short where you're focusing not on a sell the rip, but yes, we need strength, but we want to see strength into a ceiling. Maybe the ceiling is the 50% on the slow stow. Maybe the ceiling is the Darvis 2.0, right? Maybe the ceiling is ultimately the 80, the high level on that slow stow. But yeah, I think the path of least resistance is down, right? That's what I'm looking at. Now, when we say recent support, remember there's a lot of different support levels. Nothing's going to automate those nuances better than Darvis 2.0. I mentioned you can get more resources here at countdowntrader.com. So check that out. Thanks for the question, Anders. Do I want to get long euro? Well, again, I'm going to presume we're talking about the daily time frame, unless someone, unless Peter, unless you're looking at something other than the daily. No, my friend, no. We've been short. Well, one of the things that we've been talking about, both in the futures room and in the Sector Secrets Mastery, is, really 6E for futures, FXE, right? So you have your FXE for ETF traders, which is what's in the mastery futures room. And then my Forex traders, we have the euro versus US. That we're actually thinking about, can we get short again? We're at the 21 propulsion, getting into the wave. No, for me, no, my friend, not on the daily, unless you're looking at a different time frame. Not on the daily for me. Thanks for the question, though, Peter. And again, remember, if the overall trend is heading lower, I'm not interested at all in trying to pick a bottom. And in the context of a downtrend, or in the context of a market that has been, for the most part, in not only a technical but macroeconomic downtrend, we don't want to think that the lower lows are a buy the dip. Buy the dip is in an uptrend. Buy the dip is not valid at all in a downtrend, or even in a choppy market where the downtrend preceded. We look for a reversal pattern in that particular situation. So thanks for the question. All right, Jay, now that FCX, all right, is about to be behind earnings, yep. Has it retraced? Is it time to re-enter? So Freeport-McMoRan is a trade that we've had on for a bit. It finally hit its target for us, which is great because, again, we have a mindset of what? Scalable account mindset. Doesn't matter. So scalable is two things. Scalable first addresses your account. Doesn't matter if you're in a $10,000 account or a $10 million account, right? Doesn't matter. The approach is the same. The size is really what changes. The other part of scalable is scaling in and scaling out. And again, it's a very old school way of trading. It seems to be sadly a dying art, but that is the way that I've been trading for decades. And the idea is to scale in, scale out. And let's see here. And the idea is also, in this case, because we've hit the first target, to be at break even. Now, we had our live weekly session yesterday, and I'm trying to recall, Jay, we did jump into the SLX conversation, and we jumped into the XME as well. Let's see here. Do I have the XME? It's probably right in front of my face. There we go. So XME as well. And what we determined is there are other, so this is the way, gang, if you're ever at a loss for understanding, first of all, the lingo, what is relative performance? It's two words, obviously. Relative to what? Relative to a list that I have curated that I think is important in terms of relationships, or is the marketplace curating, pre-curating, if you will, these lists of stocks for us? Well, the latter is actually what's true. Never has it been less relevant for me as an individual trader to say, well, these stocks are connected to each other. No, the market's telling you where the connection is by way of high concentration weighting at the index and sector level. So let these ETFs do the heavy lifting for you. That's the relative part. The performance part. What's the performance part? Many moons ago, I developed a process to understand what the sentiment, momentum, and trend is in a market. That's the grab candles. That's the wave. And that's the evolution that led us to the trade flags. So when I look at the structure that way, right? When people talk about structure, and I'm always going to tell you, what is it that I'm using for structure? It's got to be objective. And structure is, what's the market trend that we're in? Up, down, sideways narrow, sideways chop, right? And that's where the grab and the wave and the trade flags make it really just color-coded simple. There are a number of markets that, like FCX, are moving higher within the XME. So the reason I'm sort of digging a little deeper and beyond FXC is the Canadian dollar ETF. FCX is Freeport-McMoRan. I've got both on the brain, so but we want to be open to some of these others, Jay. We want to make sure that even though we're looking at FCX, what else is moving with it and what else might have better structure? So is it time to reinitiate? Not yet. I won't know, until after we get the move. So great question. Great question. I appreciate that, Jay. All right. Next up is, how do I read the CCI, MACD, and slow stochastic indicator, the trade flags? So um, what we want to remember is that all those indicators have a specific job. CCI for me belongs to a setup that I created called the wave reversal. If we're going to get a 1, 2, 3 bottom, I like to see the market transition from a downtrend to chop to the beginning of an uptrend. CCI helps us uh, basically identify if that breakout is more likely to follow through. MACD is a momentum indicator. When we are above the zero, it's generally a bullish environment. Below the zero, bearish. And slow stochastic, well, that's overbought, oversold. So the actual trade flags, where I've made them just labels, allows me to see what that indicator is doing without taking up all that room on the bottom of my chart. You see that I've kind of stacked a lot of tools in a single sub chart on my Thinkorswim, and that's to save and keep as much room for the price chart as possible. So that's what I'm looking at there. And thanks for the question, Jillian. All right, moving on to PSX. All right. Hey there, David. So do I like PSX? Much like that Freeport Moran conversation, we want to work backwards, right? We want to work backwards in such a way that I'm looking at other names that are associated with PSX. And that usually brings us to say XOP, right? XOP is one place to look, OIH, XLE. So if I have a narrative around in this case, you can see here, I have a narrative around PSX that has a lot of double green, bullish momentum, bullish trend stocks. It's really hard for me to prioritize a non-trending. So this to me is non-trending. It's bullish, but it's bullish neutral. See how easy that is with the trade flags to identify that? Bullish neutral. And a lot of folks will talk about bullish neutral or bearish neutral or whatever. How are we determining that? And you can see here, I go right to the label. So I'd rather focus on a double green. I think it's a great place to look, David, but I probably would not begin my search at the PSX level, but it opens the door to related stocks that we are 100% interested in. Is it time to get back into gold? Hey there, Kevin, for a long. Almost. Yep. It's looking a whole lot better than it was to be looking at gold as a breakout buy through 2000, which, obviously some poor soul has got that position. They'll probably be break even eventually. But no, we want to wait for that pullback. We're getting there. We're definitely getting there. I'd like to see it a little bit lower, but we're definitely in the zip code, maybe even in the neighborhood. Not quite at that street and driveway yet, but we're definitely getting there. So great question, Kevin. Asking now is the key. So kudos for that. Asking about whether we buy as the markets are moving lower. Gang, that's the 20%. That's the rarity. That's what's going to separate you from the herd of people who just buy because the stock is up, buy because the ETF is up, buy because the futures is up. They just chase Momo. We don't do that. So kudos for asking. Hey, as this is going on sale, that's the mentality I love. That as I like to call it, the blue light special, the blue light special mindset. Good stuff. Buy the dip in AA after earnings. So first of all, this is not a great buy the dip candidate, student. It's not invalid, right? You can see the general gist of it's been higher. But in terms of, right, we have the move. Let's see how it opens. Yes, it's interesting for a buy, but I'll say the same thing. What is Alcoa hanging out with? I don't want to short Alcoa. Let's just put that out there first. I don't want to short it. But the question is, after the earnings volatility, is it a buy? And is it the best buy? Is there nothing else in sort of the tide that this individual boat, Alcoa, is in that looks better, that is double green, that has better structure? And if we exhaust at least that part of our homework, if we've gone through that process and we come out of that process saying, yep, Alcoa is as good as it gets, proximity, we're getting the trade now, it's one of the better looking stocks in that group, cool. But that why do I trade Alcoa, or why do I trade fill in the blank? That question has to be the preceding question for anything that we do. So yes, I like that corner of the market, good looking name. Question is there anything that looks better? All right. All right. Next up is, can we take a look at how? Yes, I like the idea of how. Here's one where, as we pull back after earnings, double green. This is a great proxy for OIH, right? So if we're looking at, here we go. If we're looking at that group of stocks within the oil services, OIH, you can see it's one of many, including the OIH itself, that's moving in an uptrend. And so, we have long positions that, do I still have HAL? I think we had to exit HAL last week on expiry. So yes, I'm absolutely open to re-entering, but we also have a long position in the mastery in P10. And, buy the dip and take advantage of the move higher. So how would absolutely, so, and so a lot of these names, please be aware, some of these look great. I mean, really great. And they're getting close to levels that we can do things with, right? P10 is nowhere near it, but that's fine with me because we've already got the long position. Make sure that you have sufficient liquidity, meaning open interest on some of these names. But yes, Halliburton is plenty liquid, and it is absolutely on the radar. Zions, yeah, it's absolutely on the radar. Is it time for some puts in XHB? Funny you should ask that. We had a pretty in-depth conversation about XHB versus ITB and some of the individual names that we also have on our radar. And yeah, so when you look at DHI, Lennar, NBR, Pulte Homes, Sherwin-Williams, some of these are in their earnings hot zones. But XLB, ITB, XHB are all on the radar. And then within those tides, we're looking at individual boats. XHB rallied, ITB rallied. They're very similar, but their weighting is different. ITB is a high concentration weighted ETF, while XHB is not. I like them both, but ITB hit the triggers, hit our entry zone. So we actually have an open long put position, Keith. Yes, in ITB. XHB I might add in, but really rather than going in XHB and ITB, what I'd rather do is ITB and some other individual boats within one or both of those ETFs, right? That's how we are able to go sector to stock, or index sector stock, or macroeconomic trend to sector to stock, right? That's what I teach you all. Use the sectors. That's the not so secret. Use the sectors to understand relative performance. I'm telling you, gang, very few traders do this. Very few traders do this. Be the rarity, be the exception. Look at why something would have relative performance, and then seek out the outperformance. Seek out the best example in that group of a downtrend or in that group of an uptrend. And you're going to be head and shoulders above most traders who don't do this, right? So great question, Keith. Absolutely. It was absolutely on the radar yesterday. Continues to be on the radar today. All right. All right, gang. So as always, thank you so much. I think we got through a good number of the questions, but I apologize to those of you that I didn't get to. A lot of you are getting those questions in early. So wow, I do appreciate that. Thank you so much for being a part of charts and coffee. I do appreciate your time. And if this is moving the needle for you, smash that like button on the way out. And if it's not, hey, I understand that too. Leave a question in the comment section. If you're catching this on replay, leave a question in that comment section. We absolutely do take a look at those every day. Be good to each other, gang. I'll talk with you soon.